1.5% for that stock as well.
Okay, all right. So that's the market. And on that note, the green note, it's a good time to look at the Motilal Oswal wealth creation study. They've come out with their latest one for the year 2024. And to take us through some of the key highlights and the findings, who else but Mr. Raamdeo Agrawal right here with us in the studios. Raamdeo ji, great to have you back on, and thanks for joining in.
Very good morning.
So it's been an interesting year for the market, good year. But,
good year, yes.
And I was looking at, some of the highlights of the study as well. And this year's study talks about how you can create perhaps a lot of wealth by looking at bruised blue chips.
Yes.
Bruised blue chips. So very interesting.
How did you like the title?
I really liked it. And then I looked at some of the examples. So I think you picked up stocks like M&M and ICICI Bank. And first I was like, how is M&M a bruised blue chip? It's one of the best performing stocks this year. But I realized you're talking over a longer term time frame. How from being a bruised blue chip, this is a company that's become such a huge wealth creator.
No, it's a robust blue chip now.
It's a robust blue, bruised to robust.
Yes.
So why don't you tell us more about the thought process and the thesis here?
So, the first thing is that everybody would like to see in the portfolio beautiful, all the robust blue chips in their portfolio. Yeah. But all the robust blue chips are very expensive to buy. And typically if you buy at those fancy prices, the returns are very at market level or something like that. So how do you make above market return while having blue chips in the portfolio? Right. So the best time to buy is when they are bruised. Yes. Yeah. Bruised means they are bit of scratch. I mean, they have not lost the blue chip status, but they are in bit of trouble. Yeah. Maybe because of their own doing or external forces or competition or misallocation of capital. Something, few things come together and the companies are in trouble. Okay. And good thing is if you think that how come these kind of companies can be in trouble? But if you do the data, then you realize every year 40 companies, they get into trouble. 40 blue chips. So first thing we said, actually we started this study, we wanted to understand turnarounds. How to make money out of turnarounds, like Suzlon and Mahindra, JSPL. Tons of money. So how to get this? So you've got to have a good framework. In market, if you have a framework, then everything is sorted. Sure. Whenever the opportunity comes, you can use the framework and go about it.
Let me talk about one company, sir. But when you talk about bruised blue chips, let's talk about Asian Paints.
We'll come to that. It's just getting bruised right now. So we'll come to that. First is about the framework. Framework, how to pick bruised blue chips. So first thing is to define blue chips. The world talks about blue chip, but where is the definition of blue chip?
Nowhere.
Certain market cap, certain...
So this is where because if you want to do a study, you got to have some hang of the numbers. So that's where we try to define the definition of blue chips. Right. So definition, when we said, I was very clear, blue chip definition is like 20% average ROE for 10 years.
Got it.
Okay, so that gives about 1/3 of the 250 companies, top 50 companies as the blue chips. Then the guys, they said, say Reliance or a lot of big companies, they don't have 20% ROE for 10 years. So are they not blue chips? Of course they are the blue chips. Yes. So we said Nifty, any Nifty inclusion is also blue chip.
Yes.
So first 50 is the whatever Nifty companies, and then on top of it, any company which has more than 20% average ROE for 10 years. Very stringent not, I can tell you this.
Correct.
So we came across about 107 companies in total. Okay. So then we started, I said, now we are settled with the 107 companies to study. Then we looked around. When you do data for every 5 years, you come across something like 80 to 100 companies every year. So out of 250, about 1/3 is always, or a little more than 1/3, maybe 40% is always a blue chip status. Okay. So, and actually in Nifty, about 20 companies, 22 companies are blue chips. So it is very tough to beat Nifty in the longer run because they're all blue chips.
So I have a question now, since we're talking about the framework, right? Bruised, to identify what is a bruised blue chip that can turn around, right? Because there could be companies where certain, very big things have changed, that maybe they're going to lose their blue chip status.
No,
you don't know.
This is where the blue chip comes. The blue chip, see, first thing is what is bruised. So one of the book we read, so there he said 50% from all-time high, or say last 5 years high. So that gives some kind of number. So in last 5-7 years, the companies, whatever high they've shown, if somebody has shown $1,000 and now it is horrible at 450, 500. Right. The moment it breaks 50% from that high, you are in a watch list.
Sure.
No, you are not decided to buy. It is in watch list. Please don't mistake. So you are in watch list. Now, why blue chips only? See, any company can fall. The companies which are not a blue chip, small company, they can also fall, but they don't have the competitive edge. See, it's like a Rishabh Pant getting injured. He met with a car accident. 2 years he was out. He went to Europe and all, and then he came back as again a captain, roaring. So this is what the blue chips character is. When they lose the status, like Virat Kohli can be down for say 2 or 3 matches, but when he comes back, he hits century.
Okay, how do you identify that this blue chip which has become bruised? What are the characteristics that this is going to be the turnaround story?
So first thing is that it is a blue chip. It is erstwhile blue chip, confirmed blue chip. Now then, so they have a characteristic of the competence to come back. Then see, you can't do it only statistically. Then you got to have foresight that this company is going to survive and prosper. That's a call which is more of an art than any kind of a number.
Now you've created a watch list. Watch lists are blue chips which have fallen 50% from the top. The second part of the process is start to buy, awaiting buying triggers. So at what point, because the statistical analysis says that from the lows these stocks have moved this much. Very difficult, you know it better than everyone else to.
So that is from the point of maximum pessimism. Okay.
How do you define that?
Yes. Point of maximum lows. I mean,
nobody's willing to buy in the market.
So
but who's to say that a stock which has fallen 50% won't fall a little more than that?
No, it will fall. It will fall. Particularly if you buy, it definitely will fall.
Yes.
Because bottoms are
the honest truth in life in the market.
So bottoms are made for fools and liars. You will never get it.
Exactly.
Because bottoms are always, when you look back, then you realize that was the bottom.
Exactly.
So you have to buy when you are comfortable. See, like say Mahindra & Mahindra, it was a say 600 rupees stock, 570, 580 rupees stock. After it became 280, and when they sold Sangyong, the major trouble is sorted.
Right.
In fact, we didn't believe that, is the Sangyong actually gone? There's no liability left. They said, yes, it is gone. But nobody believed. I mean, for 1 year, nobody believed that it is gone. We thought the roundabout was the loss. But nothing. They cleaned it up completely. And then, from the 300 rupees, see, in buying blue chip, the fun is that blue chips do come back to their old high. So there is asymmetric payoff. So if 100 rupees stock has come down to 25, the 3x is almost guaranteed if you buy it right. So, but the 3x happens in 3 years, which is 40-45% return, or 50% return. So this is what asymmetric payoff is an opportunity.
Okay, sir, so now let's go back to the question Nigel was asking you, right?
I'll ask it.
You please. Yeah, that's the
Is
Asian
it bruised enough?
example.
Asian Pay, it's down 30-35%, I think so, from the recent people. What the number?
35-24.
Approximately.
Yes.
So it's not bruised enough?
It is bruised, but it is getting bruised seriously.
Right.
See, what is seriously bruised? If it is not bruised 50%, then it's like a correction. It will go back. It doesn't come in my list. My, kind of a bruised blue chip. The confirmed bruised is like after 50%. So, but I don't wish anything like that. I want the stock to go back to 3,500 immediately. But if by chance it falls below, then it becomes very intense. See, because there is an intense war. See, there is a consumer slowdown for sure. Okay. I mean, I don't know why nobody's painting the houses, but there is a slowdown in the consumption of paints somehow. And in that, then your builders, they want to create a niche for themselves. They have put up 10,000 crores plant, 4-5 plants they've already started. So there is a massive push to garner market share. So obviously it is going to come from, in a slowing, if market is growing at 30%, nobody realizes the new guy comes in and takes it 2-3%. But in a slowing market, if you want to take 4-5%, I think it hurts the existing guys. And if the existing guys are not willing to give, then there is a price war or discount war. And that takes away the profitability of the industry. Like what Jio did to the entire telecom industry. In fact, where there is a very intense competitive war, typically the industry profitability takes a dip significantly, or it goes to the level of literally zero profit while the war is on. You remember PNG and Lever. So those are the things. I mean, I don't know whether it will be as bloody or not, but markets are very skeptical. And see, markets live by the quarter. First quarter result is bad. A lot of people, they come and buy. Then what happens is, the guys who have bought, the second quarter is also bad. Because it is not a 1 quarter war. It might be few years. So second quarter, when the result is bad, the first quarter, the guys who have bought, they come to sell. So like that, the spiral keeps building up.
Would it then make sense to add another variable to this definition of bruised, apart from just price, add time as well? Because Asian Paints down 30% from highs for 3 years would automatically mean it's down 50% from the perceived high is because of the time factor. Would that make sense?
We have kept it simple. You can see these are all the ways to think. How you want to think, I mean, how you want to add up your way of looking at things.
Yes.
So, we are not looking at underperformance. Underperformance, if you look at it, then it might be 60-70%.
Exactly.
Because market is up 50% and you are down 30%.
Yes.
So,
relatively,
but then we have not put that, but it must come somewhere in the picture.
But at current reckoning, would you be a little bit positive from these prices on Asian
No.
Paints?
I said,
not yet.
Till 50%. See,
Got it.
what used to happen was earlier, if any company is in trouble, I used to think, thank God I don't have it. You know, and don't bother about it.
Yeah.
Now I see opportunity in there.
There could be an opportunity.
That's
a very
the basic
interesting
thing.
mindset shift.
Yeah, so we wanted to buy all the healthy companies, go QGLP, all the quality and growth. Now, bruised quality and growth.
How interesting. I mean, what a different way of looking at things.
Yes.
But also, what's on the watch list now? Which are the
we
top
have given the list.
companies? So
we
why
have,
don't you tell us about 1 or 2 names which are top of mind for you in terms of the watch list?
So 2-3 Adani companies are there in the list. They have been bruised quite deeply, some of them 70-80%. Then you have Asian Paint, then even our dear Avenue Supermart is down about 30-35%. Then because there is again, massive competition coming from Zepto, Blinkit and Zomato.
Yes.
So that is hurting, at the margin, not really, but at the margin in terms of growth.
So let me ask you, let's take Avenue as an example, just to understand how the study is to be applied. Hectic competition, numbers have not been good, there's disruption playing out in the distribution channels. But it's a pedigreed stock, pedigreed management, quality, governance, all of it going for it. So how do you decide whether the time has come to say yes to this Bruised Blue Chip?
I'll start applying my mind. Only after 50% correction.
Okay, so the starting point is 50%.
See, conditions will be very different, I can tell you this. But I remember at 70 rupees, Telco looked untouchable. Rakesh, before just passing away, he bought tons of it, like 4, 5, 6 crore shares.
Okay.
Yeah. So he was a master of the game. He did Lupin, he did Titan, he did JSPL. I don't know how much he bought, but Telco and Indian Hotel were the last few months before he went. So what I'm saying is he was the master of the game. He always used to tell me, Raamdeo, I'm buying this. But I never could understand why he's buying. Now I can understand. But it's too late.
Beautiful. Beautiful.
Just the perception change, not a question, is that earlier when a stock fell, you said you were feared. Now you're looking at it as a shopper. A lot of the people who go shopping, they be like, oh, there's a 30% discount on this shirt, 40% discount on these shoes. You say, oh, these are blue chip stocks, they have 30-40% discount, 50%. Unless there's a 50% off, Raamdeo is not going to the shop.
Yes. I said cricket analogy.
Yes.
If Virat Kohli is injured, it doesn't mean that he is no more a blue chip batsman. He always, because whenever you give him the bat, he can hit a century. That opportunity is there.
Mr. Agrawal, I'm just hoping in the third test match all this comes through. We desperately require the boys need to come in there and perform.
Because it is one up, one down. See, they cleaned up Australians on the first match. Second match, they got cleaned. Third match, they'll come back again.
Exactly. That's what we're hoping for. Finally, before we let you go, we're done with the cricket. How are you reading the economy? Suddenly these FMCG guys are coming out with these shockers. So staples are struggling, but discretionary is doing well. Again, but if I look at the auto space, two-wheelers are doing well, and suddenly there is some inventory build-up in passenger vehicles. So just a comment on that before we wind up.
So again, in this study, we have this market outlook. So if you see, the corporate earnings started climbing up from 2020 onwards. So there is some fundamental shift in the way Indian economy is being run. Till about 2020, it was dominated by consumption. Okay, so consumption stock went to the roof, 100p, 80p, that became the norm, irrespective of the growth and all. They were fantastic franchises, but it was overvalued. Then comes the capital goods. Suddenly the whole tide turned and the government expenditure from 3% to 6% fiscal deficit, the government started pumping all the government expenditure. And hence all the capital goods companies, defense, capital goods, railway and all sort of L&T and all. So that's the theme. That theme is not going to change. And I think new governor has come. I think he's the guy who comes from Delhi. He understands everything about the tax collections and all. And I'm sure the credit flow is slowing down and hence the GDP growth rate and the tax collection. So his job is going to be quite intense. I think today we'll listen first time.
At 11:30, we'll have Governor Das for sure.
Yes.
And let's see if we get any kind of statements from the new governor as well.
Of course, he'll be very happy to make statements.
So, sir, finally, and it's been a great year for the markets. It's been volatile, up and down, but I think investors overall will be happy.
Next year will be a fantastic year because I see. Last year we got $60 billion from DI. Okay, foreigners, they were absent. I'm just saying one up, one down.
Yeah.
Now next year should be a positive year for FI. If FI is even $20-25 billion by chance, I think you will have a party.
Okay.
Big party.
In fact, we'll have the DIR number today again. The mutual fund numbers are coming out today.
One way.
One up, one down. India's coming back in the third session and FIs are coming back in 2025.
Both up next year in 2025. Thank you very much, Mr. Agrawal. Always a pleasure. Thank you for educating us and for having been with us through so many years, including 2024. Wish you and your teams a very, very happy new year.
Thank you.
All right. Well, on that note, we do have to take a very quick break. Come back on the other side. We'll have Mitesh.